Okay, good morning, everyone. Today is Wednesday, September 28th. Michael Boutros here for this live intraday strategy webinar on SB Trade Desk. We're about to get the release of durable goods orders from the United States, looking for a contraction of negative 1.5. This would be the fourth contraction this year. And survey says better than expected, flat read of 0.0%, slightly better than expected on X transports. Here's the highlight, okay? This is likely to be positive for the dollar. Non-defense X air, as I noted in yesterday's report, is actually typically a very good barometer for business investment. So you did see that beat the clip there, negative 0.1, excuse me, is what we were expecting, coming in slightly stronger than expected. So nothing that's going to be too market moving necessarily today. We do have Kashkari on tap at 8:45. At 10 o'clock, you get Chair Yellen, who will be testifying before the House Panel and Bank Supervision Committee. And then you have Bullard, who will be on later today at 10:15. So lots of Fed speakers. On yesterday's piece, guys, I also did highlight those Fed speakers and the time. So keep this schedule handy. If you're in any intraday positions, this is likely to shake up some dollar moves here on these comments. Remember, this is the first fresh batch of commentary we're getting from the Fed members on the back of last week's interest rate decision. All right, that's the major event risk for today. Keep in mind you do have DOE oil inventories coming out at 10:30, so for dollar CAD for the crude trade, also keep that event risk highlighted at 10:30 this morning. Okay, so let's jump right in. Great to be with you guys this morning. Adam, Alan, Aurelian, Dan's in the house, Graham's in the house, Kelly, Mark, great to see you all. Pooja, always a pleasure. Rich, Eileen says, good morning, Michael. Happy Wednesday. Golly gee, slow, no trading. Yeah, it's like pulling teeth here, guys. I completely feel your frustration. If you've been trying to get in intraday positions, without much success, I'm right there with you. There's not really much to bite into just yet. But remember, these periods of extremely low volatility, contraction volatility, typically precede really large or time periods of blowout volatility. So as Jamie noted yesterday, the trading range that we're seeing in the euro dollar for the month is extremely tight, extremely tight. Okay, and this is typically, like I said, precursors before larger trend moves. So Graham says no trading. What about euro dollar? We'll definitely take a look at euro dollar. I want to take a look at Aussie. The sterling crosses are of great interest. Yesterday I highlighted pound yen because we were talking about it here in the webinar. But pound dollar, pound Aus, all still on the menu. We'll talk about euro dollar. It did defend 111.83, Graham. I loved that level. Really nice rebound in overnight trade. We'll talk about Kiwi Dollar, which continues to trend lower. And then I'll open up the floor to whatever questions or pairs you guys want to follow. Obviously, all the dollar crosses are still in focus here. So if you do want to take a look at any of the other crosses, dollar yen continuing to hold a major support barrier. Just the intraday trading ranges have not been really beneficial for us. It's been very, very tight. So yesterday, I did have a short on Kiwi Dollar. That worked out pretty well. I got stopped out of an Aussie short and overnight trade. Again, that actually stopped me out at the high and turned around. So I still think you want to be minding that near-term slope we highlighted yesterday. But those are the pairs that we'll highlight today. And again, as always, guys, feel free to throw out any questions or trade setups you'd like to review. Let's jump right in. Before we get started, here's what the relative performance looks like for the greenback heading into the U.S. Open. Euro dollar, best performer, but only a gain of 0.14%. Okay, Kiwi dollar, worst performer, and this was a welcome move here, down 0.63% on the session. Biggest loser, biggest mover in general of the majors versus the greenback. So keep that in mind. And again, we'll definitely take a look at Kiwi dollar later in the session. Okay. Looking at the dollar index. This is the DXY, so this is the ICE dollar index. As we said yesterday, we're going to try to start focusing here a little bit more as per your requests on the ICE dollar index here. Still continuing to consolidate. Excuse me, by the way, I did update the radar charts last night, so you do have a fresh batch of dollar, crude, and gold charts available to you here. Really just wanted to highlight this key range, okay? Just like in the Dow Jones Fxcm dollar index, which I'll still refer to in a moment, Conwall, great to see you in the room here. Good morning to you as well. Is we're in consolidation. Okay, so the dollar index, the dollar in and of itself, base currency, seems to be in consolidation here. You have nice clear-cut resistance at the monthly open, which converges on the 100-day moving average, and that's right at 95, 99, 96 essentially. Okay, key support, that's very simple. You got a basic slope support here off the lows that you made in June. It coincides dead on with the 618 retracement of the advance off that August low, and that gives you confluence support down at 94, 95, basically 95. So you got a 100 pip range here on the ICE dollar index. You'd want to see sort of invalidate or break to give us our next directional leg. Bearish invalidation, I still keep up here at the 618. As I noted in yesterday's piece, you heard, battle of the 618s, because that's essentially what's happening here, okay? You have the 618 retracement here as key support. This is our bearish invalidation level. And a break lower, which is favored, will look for this 618 off of the low, okay, which has already responded and caught the lows for last month. So the levels are really clear. And until we clear this 96, 97 barrier, or 96, 96.25 or 95, 96.25 barrier here, you want to be cautious and treat this as a range until we get lower or until we break out. Okay, if it does break to the top side, you're looking for slope resistance dating back to the highs here from December. But certainly from our standpoint, downside break is favored of the formation. Okay, so keep these levels in mind. Absolutely critical. Momentum is giving you absolutely nothing here. We're pretty much range bound in the oscillator as well between 40 and 60. So we'll really need to see a little bit more of a definitive break sub 95 here to 95 to get this thing going for the next leg lower. All right, any questions on the greenback? Here's what the Dow Jones Fxcm dollar index looks like. Very similar consolidation. We're sitting mid-range here for the week, literally, with resistance here, monthly open, 200-day moving average, just ahead of that 12,000 mark. And again, you have slope support here, but the major key barrier you need to get through is 1185 or 11,850. All right, so similar setups. Obviously, the ICE dollar index, guys, is very heavily weighted the euro. It's a basket of 6 currencies, but about 60% of the index is comprised of the euro dollar. So it tends to skew things, especially when the euro finally sees a big move on the index, but it's obviously a much more widely traded market than the Dow Jones one. So we'll go back and forth and keep track on both of these. Okay, so if there are no other questions on the index, watch this range consolidation. We'll be looking for a break. Specifically, one other thing I do want to note, guys, we are heading into the end of the month. We're heading into the end of the quarter. And these times, specifically heading into tomorrow and Friday, not the best environment for intraday trading. So if the setups start to dry up heading into the end of the week, don't start panicking. The market will offer plenty of more opportunities. We open up Q4 and October trade. So, tread lightly. Any positions that you want to take, specifically heading tomorrow and Friday, you want to be a little bit lighter on the leverage and a little bit more meticulous as far as fine-tuning your entries, just because you see a lot of rebalancing, portfolio rebalancing, position adjustment, specifically heading into the end of the month, could charge some really radical intraday price action. So just keep that in mind. All right, let's get into the meat of it. I want to start off with Aussie dollar. Here's what Aussie looks like. A little frustrating for me because I did get stopped out of that short overnight right before it turned over, but still looks pretty good. So the premise of the trade here for Aussie is that we're coming off of a long-term trendline resistance. This is a 2013 trendline resistance. We talked about this yesterday. We probed through it earlier in the month, failed to close above it yesterday. You have the August high day close, which also was just ahead of where we turned. And momentum still holds 60 resistance. So the immediate risk is for a pullback, okay? On its face value, it even looks like it could have completed a 1, 2, 3, 4, 5. So the impulsive rally here suggests, again, you're at risk for a near-term correction to the downside. And that's really what's having us have a short-term focus on the Aussie. Inevitably, I do want to get long. It's still within the confines of this broad ascending median line formation we've been following since the start of the year. And like I said, inevitably we'll be looking to buy it. The immediate risk, though, remains for a pullback off of this key region. Okay, near-term bearish invalidation is at the August high day close, 69.80. Excuse me, 69.98. Or 76.98. Oh, I'm dyslexic this morning, guys. Sorry about that. Right here. Okay. If this does break, one thing I do want to bring your attention to is I still would be cautious on the long side because you have to contend with that trend line and then the major critical resistance that caught the highs back last month. This is the high day close for the year, specifically made on, April 21st, and a basic 88.6 retracement of that advance, which almost caught the exact high that we made last month. So even if we do break, I'd be cautious. You still have these two levels to contend with, but the immediate risk still remains for a pullback. Here's what the scalp chart looks like. Okay, this is the hourly chart. So interestingly enough, I added this pitchfork on here yesterday. As I noted in the report, it was a little too early for me to rely on it too heavily because remember, the only tag that we got was this support tag right here, which was perfect. Literally caught the median line exactly and rallied. I didn't know if this was going to be on tap or not, okay? I did get a near-term short trigger here on a 5-minute chart that put me in short. It blew me out on the way up. I took a 14 pip loss, nothing major, and then rallied into the upper median line parallel, which held as resistance. On that rally, divergence, price action making a higher high. Remember, when we're talking about divergence, all that matters is the close. So higher high, the oscillator making a lower high into resistance. So there was actually a phenomenal opportunity to get back on the short side here. If you're trading European trade or late Asia, this was sort of your ideal entry for the short side of Aussie dollar. Moving forward from here, looking right ahead, look for that trendline support, basic trendline support off the lows. Once we crack that, you're looking at the September high day close, 76.40. You're looking at this region here, which is a little bit more important, at 76.22. The 76 handle would necessitate a break of the weekly opening range. And this level is, for me, what I would be interested in possibly looking for exposure on the long side for Aussie. This is down at 75.69, swing high from earlier in the month. Really nice pivot here last week. And if I take this a little bit further out for the 4-hour chart, okay, look at these slope lines we're working with. All these slope lines, guys, are the basic operative slope off of this, the daily chart. So they're all working with the same slope. And if you just extrapolate some sliding parallels here off some key lows, you can see some really nice price action converging right here, basically at 75.70. So an area of interest for me, if we do get down there for a possible support hold, possible reentry on the long side, immediate risk remains weighted to the downside while below the upper median line parallel here. Okay, questions on Aussie dollar? Again, keep in mind that we don't have any Aussie data on tap for the remainder of the week, so we'll be largely looking to take cues here from the dollar. Again, Fed speakers on tap. Tomorrow, you get U.S. the third and final revision for second quarter GDP. On that note, we are expecting an uptick from 1.1 to 1.3% for the third quarter. Keep in mind one other important critical data point that's coming out tomorrow, and that's the core PCE ratio, or the PCE, consumer or personal consumption expenditure. This is the Fed's preferred gauge on inflation, okay, versus the consumer price index, or CPI, which is what really the headline figure has been for inflation. Core PCE is what the Fed relies heavily on. And in fact, when we look at the Fed projections, as we did last week, their longer running projection for 2017 is 1.8%. Target is 2. Okay, so they're still running below targeted inflation. And again, if we do see this specifically uptick to 1.9, that would be a very positive development for the Fed. Certainly, you might see, Fed fund futures pop higher if we do see this beat 1.8, but this is going to be a critical read as we come into tomorrow, and we'll cover that live in the webinar here at 8:30. All right, any questions on the Aussie? Before we move off, Conwall, silver, and oil. We'll definitely take a look at oil. I think we started looking at silver yesterday. We'll take another gander here, but let me jot those down. Okay. Conwall, did you check out the new radar charts on the intraday page? I have a new oil chart on there for you. It's the same levels we were looking at, but we'll definitely review that. Okay. Let's move right on to yesterday's update. We also highlighted the pound yen. Sushil wants to take a look at pound yen right now. We will, and we'll take a look at pound dollar and pound Oz as well. Look, it's coming into some near-term resistance. Here's what pound yen looked like yesterday. Here's what pound yen looks like right now. So we're coming into that near-term resistance that we highlighted. The weekly opening range high comes in at 131.23. The high so far is 131.18. This is sort of the level to beat to validate, in my humble opinion, a near-term reversal here in pound yen. Bring your attention real quick to the daily chart and the critical nature of the support structure that we're coming off of. This is basic trendline support off of the lows for the year. Very, very clean. This is the 2016 low day close. Really nice pivot. Now acting as resistance. And the weekly opening range high comes in just higher alongside former slope resistance or former slope support, now resistance. Okay, so this is the level to beat. I like buying while above 129.97. Which is just a swing low pivot here. And a break above here, you're looking for 131.80. Watch this median line. I don't want to get too excited about this median line because you only got a couple of pivots off it. But the real, essentially the longer term focus would be a rally towards 133.21. Brexit swing low, and you have the upper parallel there as well. So typically a pair that has a much wider and healthier ATR, it's just near-term price action has just been a sort of slow grind higher. So as far as trying to pinpoint entry since last night, haven't really gotten the opportunity. From here, you either want to see a little bit more of a correction back towards that 29.97, see if you can get a stop against that low, or if it does rupture on the open of U.S. trade, you'd be looking for the pullback, zoom, retest, and we'd look to initiate a new long position, trying to get that move towards 31.80 and 33.20. Any questions on pound yen? Sushil, talk to me. So you're coming up into resistance right now. This is the weekly opening range high right now, 131.23, and that's the barrier you need to get through to really validate the reversal here in pound yen. Okay, I like pound strength, generally speaking, but the pound crosses across the board are coming into resistance. Let me just keep jotting this down and lose track. We did the DXY, that's 1. US dollar index, that's 2. Aussie dollar is 3. Pound yen is 4. Pound dollar. Here's what pound dollar looks like. So as we noted the previous day, I think I put the link for you here. Yes, I did. Here's pound dollar from earlier in the week. Okay. Looking to stay constructive above the low day close, which was 129.26. That actually worked out exceptionally well. So if you've been looking for long triggers, you've been doing all right. Initial near-term focus as far as resistance, 130.38. We're just about there. The high that we made in overnight trade, just shy, 130.30. So about 8 pips off. But I do think you inevitably get that stretch. This is the first area of near-term resistance. You got a basic 236 retracement from the decline off the highs. You got basic trendline resistance or channel resistance off the highs. Both converge right there, right around 130.38 heading into U.S. trade. Okay, so you could get some kickback from here. Again, I favor buying dips while above the weekly open at this point, and we'll need that break above 130.38 to get this thing going, targeting 130.72. Soft target, that's just a 764 retracement. but really this is the bigger range of resistance you need to be mindful of, 31.16 into 31.36. So you can see all the pound crosses are sort of working the same type of move here. Pound yen would get really interesting, Sushil, specifically if the yen finally starts to sell off, meaning dollar yen higher or just plain blatant yen weakness. I think that would really perpetuate some of the pound strength that we're seeing. That being said, even pound Aussie at this point. Well, any questions here on pound yen before or on pound dollar before I move off? Okay, so pound Aus, which is another trade that we've been following as well. Look, this thing is messing with some serious levels here. But I want to continue to bring up this chart. I know we talked about it here in the webinar yesterday. You know, the low day close, 169.50 into 169.76, a region of support, still has not closed below. Look at this thing. Look at this thing. Nice rounding bottom here in the momentum signature. If you bring this into a line chart, you could see a little bit clearer what I'm talking about. Okay, so despite the spikes that we've seen, the long wicks below this region, the closes continue to respect that key near-term support. And for me, near-term does leave the risk, let's fix those, for a little bit more of a rebound here near-term. Okay, that's still the premise of the trade since the start of the week. That's still the premise of the trade right now. It's just unable to clear this level to the downside and has been for the last couple of days. So here's what the scalp looks like. Okay, we highlighted this yesterday, this near-term descending channel formation. There's the break just a few hours ago. Remember near-term topside resistance at the weekly open, 170.08. Okay, we're about to hit that right now. Subsequent topside move, you'd be looking for a move towards that 170.90 level, that 171 region right here. And this is the reversal breakout region. This would necessitate a break of the initial weekly opening range high, a basic 236 of the decline off the high, and would put us back above basic median line support. So I like it. I like pound Aus higher. It dribbled much lower than we would have liked. I was looking for a hold, if you guys remember, again, as the daily chart suggested, but we continue to hold above that level on a key close basis and, marking divergence into the lows. Everything here does look like it might be ready for a little bit more of a topside pop. First things first, though, let's clear not only the weekly open, but the weekly opening range high here to get aggressive on this. That being said, still like buying pullbacks above 69.18. All right, so pound Aus, pound yen, pound dollar, all sort of working with the same near-term game plan. Obviously, pound dollar is the one of the more clear ones in that we've already cleared the initial weekly opening range high. So while we are coming into some structural resistance there, I think you look for the pullback near term to get us back in the trade here. All right. Actually, Jamie just tweeted this, guys. I was just had my Twitter open, and this is the chart he's looking for pound dollar. Very similar in price action. Let me get the pound dollar chart up again. Whoops. Very similar in price action that we're both looking at, this near-term trend line resistance, median line resistance, to really get this thing going a little bit more fervor here to the upside. All right, so that's our exclusive special on the pound crosses here today, guys. Those are the three major pound crosses I'll be looking at. Moving right along, I do want to take a stab at Euro Dollar, Kiwi Dollar. I see your question here, Sushil, on Aussie Cad. Interesting pair I haven't looked at in quite some time. But if we have time, definitely we'll take a look at that. Davin, great to see you. How are you? Michael, could you please take a look at pound Kiwi as well? Eileen says, love those exclusive specials, exclamation point. Cheers, Eileen. Davin, pound Kiwi, huh? Let me take a look, man. I haven't really looked at this trade in quite some time, as you can tell by the analysis here. So give me a second. Since we're on the pound crosses, before we jump across to the euro, let me see if I can update this for you. Okay, let me go back to the daily here. So right off the bat, I can just tell you, highlighting this, just looking at this for the first time this month, you're testing the 2013 lows again. I don't know if you know that or not. We came right into it last month. It held. We came into it, or excuse me, this was back in July. Last month it was the low. Here's this month's open. Let me add that in. Okay, bear with me. This is going to get kind of messy. I just want to see what it looks like, guys, so just give me a second. Okay. I don't know if it's something we'll want to stress right now, but it does highlight some interesting spots. Obviously 77, we just talked about that, right? So that's going to be still your key support barrier here for this pair. Oh, I don't know why that's that color. Here we go. Something like this. It also highlights resistance right here. And the monthly open comes in just ahead of that, right around 81. Clean that up. And one other thing we'll want to just take a quick look at is a basic retracement off the highs here. Let's change the color of this so you guys can identify the difference. Okay, we'll leave that 50 line in there too. So this is what I'd be looking at near term, Davin. Let me know if you're holding a position or if you have a specific question. But on a first glance, and again, I haven't looked at this in over a month at this point, but I'm glad you bring it up. It's actually pretty interesting. Wouldn't necessarily stress that trend line. Let me clean that one up. But this is what I would sort of be looking at near term. Okay, I like a constructive approach above 77. That goes without saying. Not only because of where you are in the daily chart here, and obviously the key longer-term implications of this level, but also the fact that you've been getting some divergence in price. Here's price making a lower low on those reference points, higher low. Okay, actually this 3-point resistance trigger which broke also has been more or less offering some support. Price action or the oscillator has been holding above that since the break. So you're at resistance right now. I wouldn't be looking necessarily to get long from here, Davin, but I do like getting long on a pullback, looking for that breach to initially target 80.67, which is a basic 618 from the near-term high, but more importantly, structural resistance as well as that 38.2 that brings you into 81.61. All right, on its face value right now, it's just put in a weekly opening range. So here's your weekly open. You put in a high, you put in a low on a Monday, Tuesday stretch. Here's Wednesday, checking the high again. If this breaks, Davin, look higher. He says, I'm holding a short position. So I'm not sure where you're holding it from. If you're holding it from these levels against the highs, yeah, you might get some kickback into the U.S. Open. But to be quite frank with you, if this level goes out, I'm expecting a more concerted rally here for sure in pound key. Okay, and that sort of works out very well with our outlook on the Kiwi. So you know what? I'm going to take a quick segue here. Instead of going over Euro first, what was this? Pound Kiwi. So that was number 7. I'm going to go over Kiwi Dollar just so you can get a picture of where we are. Davin, does that make sense? Awesome. Thank you. You're more than welcome. Great to see you in the room here. So let's take a quick look at Kiwi Dollar. Okay. So Kiwi, my friends, looked like this early in the week. We got a decent scalp on this yesterday. I was really maybe a little bit too heavily loaded on it, but it worked out well. So here's Kiwi Dollar and where we started the week. We were looking for a short side bias on Sunday on a rally into 72.70. Remember, we got that rally. Tried to play the pullback on that one. I showed you what happened with it yesterday. Rallied up right into trendline resistance. Okay, really clean rally. Right into that trendline resistance where it quickly whipsawed and rejected it right back to the downside. So initial targets we're at right here, the monthly and weekly open. We're now testing that as near-term support. What you see added on here is a very near-term 100% extension, which is offering a nice pivot in price. I don't want to stress it, but just ahead of that key support at 72.20, 72.17, you do have 72.29, which would be a 1618 off the high. Also converges with this median line here, sliding parallel. So this is what the targets would look like for me on a continued move lower here in Kiwi Dollar. Still like the short side. But my point being, and why I bring this up right after your question, Davin, because if a Kiwi continues to sell off, I think that could really fuel and help that sterling Kiwi start to show us a little bit more of an upside approach there. And that would, again, sort of fit in with our near-term cautious constructive bias on SB, on the pound. Davin says, first day here at the SB family, newly joined. Well, Davin, welcome aboard, man. I knew your name looked a little new. Great to see you here in the room. Quick reminder, we do this every day, Tuesday, Wednesday, and Thursdays before each session to get you guys geared up and ready to go for the day. So great to have you on board. Adam says, welcome, Davin. Love the camaraderie. Sorry I'm late. Have we looked at Euro Aus? Wes, we haven't. If we have time, we'll take a look at that, and I'm running late. So let me jump through. Any other questions on Kiwi Dollar or Sterling Key? Kiwi Dollar was number 8. All right, let's jump into Euro Dollar, number 9. Here's what Euro looks like. So, man, what a nice rebound. Okay, this was the level that we highlighted yesterday, way ahead of schedule. I thought it might have been a slow, moderate lower, get that towards the end of the week, but here it was, guys. Really nice defense and reversal on divergence right on the 618 retracement of the near-term advance off last week's low. I love it. You know, I don't know what to tell you. It looks pretty good. You're now checking median line resistance. It's getting a little messy here. I don't want to necessarily stress this trend line, but you can see that it's just above the highs here. Still looking to remain constructive above 111.83. Bullish in validation, which means the level if which broken would shift my attention to short scalps would be down here. So as long as you stay above 111.82, I'm looking for long triggers. Only a break below 111.56 would inherently have me looking, you know, much lower in the euro. So that's sort of the near-term game plan moving forward. You know, on the broader perspective, guys, this thing is in consolidation like no one's business. The monthly opening range remains intact. Here's your monthly open, September. Here's your high, right at trendline resistance. The low that we started for the month was also defended and maintained last week, and that continues to keep this range in focus. Smallest monthly range that we've seen, and I think, I don't remember what the stat, we looked it up yesterday, me and Jamie, I think like 2 years. So something's up, and I think we'll see an explosion of volatility here soon, but near term, be mindful of this key range. Subsequent topside targets 112.55. Okay, then I don't have horizontal levels. From there, you're going to want to look at these convergences, guys. Right here specifically, 112.86, or so heading into the close of the week would be an area of interest for me. The upper median line parallel, that coincides with basic trendline resistance off the highs here from, what is that, from August. Any question on Euro Dollar? Adam says, Davin has come to the right place, Michael. Cheers, Adam. I appreciate that, brother. And Davin says, thanks, guys, to everyone in the room. Wes says, love it, too, for the Euro Oz. So for Euro Oz, yeah, it could have some mean implications, but I'm not going to lie to you, Wes. You know, me and you have been super patient with Euro Oz. Man, you know, I don't want to advocate trying to fade this move because we're still below structural support that we were talking about. If you guys remember, we started off the week saying, look, as long as we hold 46.36, 46.60, I would like to see a rebound higher. Well, we broke below it, and now we're checking as resistance. So I don't want to get too excited just yet, Wes. I know both of us have been sort of looking for this turn. This changes things, man. You know, it makes me a little bit more hesitant to get too aggressive on this pair because as it stands right now, we should be looking for a rally to hold this slope as resistance for a next leg lower. Now, that's not what, my gut feeling says. I do want to be, broadly long, but price action saying something different, man. So we have to really, he says, yes, I agree, but I have faith. There's that faith again. Cheers, Wes. So we'll see how it pans out, man. I haven't taken any positions on this, just to be completely frank with you this week. Yeah, I sort of just don't like what we're doing here with structure. If you... Yeah, it's a tough one. It's a tough one. I've been trying to get excited about it, but it's been hard at these levels. So for Euro Oz, I'm not really going to give you a concrete bias here. To be completely frank with you, Wes, I'm neutral. I'm neutral. If we crack back above that slope support, also the weekly open, objectively, aside from what I think or what you think, objectively that would be constructive. But as long as we stay back here, I'm a little hesitant. There might be a long-term support line at that level. Which level, Wes? Down here? Let's bring this into a weekly chart. So I mean, you could do something like that if you take the low that you made for 2013 and the subsequent low that we made last year. Yeah, I mean, it's messy, but you're kind of probing that right now. Bring it back into a daily. Yeah, I mean, even more so than that long-term trend line. I'm not going to really stress that at this point, Wes. I would tell you, look at this one, man. This is a little bit more of a concrete trend line in my mind because, remember, 2 points is speculative, 3 points is sort of confirmation, right? So you have a 1, 2, 3 point support trigger. We did break it last month, but false breaks happen all the time. And then here's a quick rally. So for me, I'm still focused on that. Which is why you could still see a little bit more of a drift lower here if we're going to get a perfect tag like we did those last 3 times before we move off. But I don't want to stress this formation per se. If we do make a new low, something like this is what I would be looking for as far as giving this thing some structural guidance. But it's way too soon to tell if that's a concrete low or not. So I don't really want to stress this formation at this point. So I think I'm going to shelf Euro Oz for now, but I'll keep you updated. If we were to get some sort of outside reversal day or some sort of indication that takes us through the monthly open, I think it would be a much more attractive trade. Wes, does that help? I'm sorry I don't have so much of a strong directional bias on this one, but I'm always going to tell you what I think, man. I'm not going to try to art up some nonsense here. He says, yes, thanks. All right. So Conwall says, Michael, sir, please don't forget my pairs and their levels. Thank you. So Conwall, you were looking for silver and gold, right? Pete, I think I missed your question earlier, man. On monthly chart, looks like a descending triangle, maybe a breakout to the downside. Pete, what chart was that you were talking about? Euro dollar. I'm going to take a quick segue, guys. I'll be right back. Euro dollar. Look, it could be. It could be. But Pete, I'm very mindful of this one thing, man. You're in the formation until you're not. So triangles can break to the upside, they can break to the downside, they can slowly mutter sideways. What we want to make sure that we keep in mind is not only, well, let me take a step back. There's a couple of different reasons that we're looking for a possible topside stretch, both the cyclical tendencies that Jamie's been following, longer term trends as far as, you know, seasonalities moving forward also favor some dollar weakness. And if we look at this, you know, it's broadly been in consolidation, right? Even the yearly open, here's the yearly open. We straddled it for a while. We came back, checked the yearly open as support, rebounded to a new high. This was an exact 100% extension, so that's 2 equal legs down. That screams correction, which leaves still the broader upside bias still intact. So yeah, I mean, look, you could be absolutely right, Pete. And if it does break this triangle or basic trendline support just off the low from December, I'm with you, right? A break below the reversal day close here, in my mind, puts this in an extremely bearish pattern. But as it stands right now, we're still in the consolidation formation. We're still within the confines of this upslope. We want to make sure that we're staying as objective as we can. Does that make sense? Pete says, thanks. I wasn't sure how to interpret that triangle. Yeah. So I hope that helps, Pete. You know, triangles, you know, typically triangles, let me just take a step back. If you take a look at Murphy's book or any technical analysis book, typically they are continuation patterns. But I can show you a million instances, guys, of triangle patterns that have been reversal or terminal patterns. So keep that in mind. You know, nothing works 100% in technical analysis, obviously, but it's sort of like people misinterpreting RSI, right? And I talk to you about this all the time here in the room. People see RSI and overbought, and their inherent, you know, desire is to want to fade the move and to get short. Well, RSI can stay into overbought condition for an hour, a week, a month, a year. Nothing says it has to come back from overbought condition. It's the pullback from overbought that is the actual signal. Same type of mentality we need to take with these formations, specifically consolidation formations. So I hope that offers a little bit of flavor there and some color on that, Pete. Good question. Cheers, Adam. Yeah, Michael's forks and trend lines are powerful. Haha, says Davin. Cheers on that. Conwell says, crude. I'm back on crude, brother. No worries. Let me jump into crude for you. Okay. So that is euro dollar. Crude will be number 10. Oh, we did euro Aussie. That was number 10, right? Crude is number 11. Here we go. So the crude oil charts, again, a quick reminder, have been updated here on the radar charts, so keep that in mind. Here's what it looked like last night. And it's going to continue to look like this for a while, I think, guys. You're going to see a little bit more back and forth. There is a near-term consolidation. If you look at this sort of on an hourly or a 30-minute basis, just a near-term consolidation off of the highs here. Long story short, the basic key levels have not changed at all. Okay? Near-term resistance, this confluence region here with the 100-day moving average and basic trendline resistance off the highs from last month. Near-term support hasn't changed at 42.91. Just lower is the median line. I didn't name it as a target in yesterday's update, but keep that in mind. Next major key downside target, 41.26 into that 200-day moving average. Okay. Bearish invalidation. What would shift my attention would have to be a blow off through 47.69. So a break above here, I think, puts the focus back on the upside. That being said, all things held constant, you might get some more back and forth here, I think, before it silently makes a move. But, you know, we're still within the confines and reacting pretty well to this larger descending formation trade. So you're short from 45.22, so just a couple cents right now. And I'll go back to silver in a minute. Let me ask you, where's your stop on that, Conwall? 46.36. Okay. Yeah, I could see that. See, what I could see this being a little bit more of a reversal higher in crude on the near-term chart. Um, so this could be sort of a near-term correction, A, B, C, D. You'd look for an E low, and then a possible rip back higher towards that trend line before we start to break down. Remember, 44 near-term is a big level in price. We talked about this yesterday, Conwall. Major pivot, nice confluence Fibonacci levels there as well. That's 44, just above 44, 44.07. So, and let me check one more thing off this high here near term. Okay, so the 100 comes a little bit lower, 43.85, but I'd still put that as sort of range I'd want to watch near term. Conwall, does that help here on crude? Let me clean up a little bit of these fib levels. You don't need that 38.2 no more. And that brings this sort of key resistance up here. Ooh, and a really nice pivot here of 45.45. I'm just going to highlight that here as well. Support, bounce, break, resistance, or support again, break, resistance, near-term resistance. So Conwall, does that help on crude? Those are levels I'd be looking at near-term, man. I would keep a pretty tight stop on what you have there, because if we do break 40, right, if we do break, okay, your stop's at 46.36. If we do break the high that you just kind of made, or specifically this trendline resistance, I would expect to see a test of the highs for the week. So I'd hate to see it get stopped out on that, but be mindful of that near term, sort of, that's what I'd be looking at. All right, so that is crude. That's number 11. Number 12, I do want to cover silver for you. So let me just get my watch list here. Commodities, here's silver. And I think we talked about this briefly yesterday. Oh, remember we were at support? Okay, so that broke instantly after yesterday's webinar. We highlighted that yesterday. A key 618 retracement just off the low, basic slope support. Didn't even get a rebound. We broke right below it and hit that 786 retracement to the pip before finding resistance here again. So at this point, don't want to necessarily stress this slope from the downside. Momentum still looks pretty bearish. I'd be looking for a possible drop towards that 88.6. We even gapped lower into the open, filled the gap, and that makes this directional range very important. So here's a quick tidbit on how to play these gaps. A lot of the times when the market gaps like this, your initial instinct is going to see the market to go back and fill that gap. Once you've filled that gap, that range that the market has created typically can be used as an opening range strategy in and of itself. So that means, you gap lower here, you filled the gap, and now this range becomes critical. So break lower validates a near-term directional bias down towards your next objective, whatever that is. And a topside break really validates a little bit more of a reversal, specifically when the break happens in the opposite direction of the gap. So the gap was lower, we put in a range. If we clear the range to the upside, that's a reversal near-term bias. If we clear the range to the downside, that's continuation. You'd look for a drop into 1876. So heading into the U.S. Open, watch 1894 into 1918. Okay, here on silver. Conwall, questions on the silver trade at this point? Feel free to take a snapshot. Here's your daily chart, and again, here's the near-term 30-minute, or hourly rather. So that's silver, number 12. I do want to take a quick look. I don't really have any comments. Thank you, sir. No, sir, it's okay. Right on, Conwall. Cheers, mate. Always good seeing the room. Just a quick look at gold. I don't really have much to say on this, guys. The levels remain unchanged. Still looking for 1315 as major support and the near-term bullish invalidation level. So if we do get a drop into this region, look for possible long triggers. I think a lot of this is going to be directionally driven by some of the data and event risk later this week, i.e. commentary coming out from the Fed today and tomorrow, as well as those GDP second quarter revisions for the U.S. So make sure you keep those in mind here if you're trading gold. 1315 is near-term upcoming support. So that's number 13. Your questions, we covered Euro Aussie. Someone had a question on Aussie Cad. Was that correct? Hi, pal. Did I miss Dollar Cad review? Thanks and happy hump day. Kelly, great seeing the room. I haven't covered Dollar Cad, but it's probably a good idea if we're going to do Aussie Cad. So let me do Dollar Cad first. I have no clue what to do with this trade. I'm going to tell you guys right off the bat. I have key levels in mind. Intraday, this thing is, it's likely to slice up everyone. So just, know where there's worth squeezing some water from the rock. There's nothing here for me. I just feel like we'll get chopped up like no one's business if we try messing with this. So look, it's in an uptrend. It's flirting with resistance. There's a lot of whipsaw price action coming off that 32.54 barrier. We couldn't even reach into it last couple weeks. Now we've probed it twice and pulled off. So I really don't have a near-term directional bias on this that I would be comfortable relaying to you guys, Mark and Kelly, both of you looking at Dollar Cad. Even momentum has pretty much gone completely silent over the last day or so. Here's 50. You're basically just straddling 50. Slight upside bias in your term if you had to put a gun to my head, but the only way I'd be looking to play this is if we get a little bit more of a dramatic pullback to offer a better long position. Here's the daily, and this is pretty much all I need to work with right now. This is not my cup of tea. Maybe a pullback into the monthly open. Would be a decent area of which I'd start to look for some support. Initial weekly, monthly opening range highs. You got a sliding parallel in there. But aside from that, I don't know what to do with this thing. I can't buy at fresh multi-month highs. So I'm sitting on my hands here still. Yeah, Conwall, I will. I'll have this archived for you as soon as possible, sir. Okay, we'll keep my hands in my pockets. No trades, it appears, today. Glad I tuned in. Kelly, specifically on Dollar Cad, you know what I mean? I think there are other appetizing setups. I'm still interested in Aussie. I'm still interested in pound on all three of those pound crosses we covered today. But for Dollar Cad, I just don't have conviction, and that's, typically a good time where you want to just fall back, set up all your charts. Again, we're heading into the monthly close, the quarterly close, so I'm not going to, press a trade that doesn't have much directional clarity to me at this point. So that's Dollar Cad. So right off the bat, as I move into Conwall, or what was this for? Who was the Aussie question, the Aussie Cad question for? Okay, I don't remember who the Aussie question, I don't want to waste any more time. The Aussie Cad question was for a lot of comments coming out here, but here's what Aussie Cad looks like. And again, we'll take a fresh look. Haven't really been following this one for some time. Woof. What a breakout. Stop traffic. Sushil, there you are. Sorry about the delay. That's some serious implications for this move here. Let me clean this up for you real quick. So, couple things you want to note. This is a break of the, or attempting to break. Let me correct myself here. Here's your yearly opening range high. And you made that on January 1st. Or the first day of trade, January 4th. The actual open for the year comes in at 10074. Okay? You made a 786 retracement, rallied right back into the yearly open, literally to the pip, pulled off, and now we're probing again. We haven't closed above it. So this is what I'll tell you if you're looking at this trade. If we close above this level for the first time this year, that would be an objective yearly opening range break. Okay, specifically because not only the yearly opening range high, but it's also been tested before and caught the highs last month. So if we're able to close above this key region, and again, that region is actually, the high is 10118. If we're able to close above this region, momentum's an overbought after holding 40 support. That's as constructive as it gets. Okay, and we did break this descending median line formation. So that being said, let's take a little bit closer review. See if we have anything to work with here. Okay, this is going to get messy. Just bear with me 1 second. I just want to see if there's any median line structure here to this advance. Does this slope offer anything? Okay, it doesn't hurt. I'm going to leave it here because it actually ends up being the exact reference point of that low and the exact reference point of that high. If I take this and just slide it down, you can see, look where my marker is here, right here, and then right at that low, it's literally the same exact slope. So I'm going to keep this operative slope for now. And that, again, highlights near-term support, okay, and broader bullish invalidation. Monthly opening range low with the median line parallel. 200-day moving average also in that region. Now on a topside break, wow, this is actually a pretty beautiful setup. You're looking there. So that's what I would be looking at near term for Aussie Cad. Again, this is my first look at it. What I don't like about the trade is the CAD. Okay, I think Aussie can pull back. So that's my concern here, is that this is some sort of false break. But do I want to be long CAD per se? I have no bias on CAD. I'm neutral, right? So keep that in mind here, Sushil, on Aussie Cad. I don't have any scalp setup per se for you on this, but near term, that's what I'd be looking at. Watch today's close specifically to see how this thing reacts around that level. If you were doing Aussie crosses, can we look at Aussie Key, please? We're running out of time, Graham. I'll give you a quick peek at Aussie Key. I'm not trading Aussie Key, but the breakout certainly is still underway. We've made it back above the January initial range lows for the year. At this point, Let me just update this for you real quick. You can take a screenshot. That's the opening bell for US Trady here in the background there. And it's too soon to tell, but I was looking at this earlier. I was just messing around with this. I think it was last week with this formation. It's way too early to tell if this is actually going to be something that's fruitful. But you see the lows there? Almost a nice move on it. Almost. So it would highlight basically the 200-day moving average, which is above the 2016 open. Long story short, I want to stay constructive at this point, basically well above the initial monthly opening range high. So right here. All right, with your major key topside objective, still 106.28 into 106. I'm sorry, 106.62 into 106.55. Major key region here of resistance for Aussie key. All right, Graham, we'll go over this again tomorrow. We'll see if we can't work out something for the near-term levels for you. But for now, I wouldn't go chasing the breakout just yet. Look for a close above this January low to keep this thing going. And that is Aussie key. That was 14 was Aussie Cad, Aussie Kiwi 15. All right, I'm going to wrap it up here because I got to run. But thank you for everyone who attended. We'll be back on board tomorrow morning, 8:30 Eastern. Keep in mind, also today's Wednesday. You get the midweek strategy webinar with Jamie at 1 p.m. Eastern. So don't forget that to give you a nice little quick update on some of the longer-term implications and swing trades we're looking at on SB. Till then, best of luck trading. Keep your eye on the economic docket, guys, with those comments coming out with the Fed members. You know, they're likely to say some stupid something that makes the market move. So just keep that in mind. Trevor says, thanks very much, Michael. My pleasure. Eileen, wait and see for now. I'll see you tomorrow. Same here. Have a great day trading, guys. See you tomorrow. Cheers.